Hey, good morning, Black Oak family out there. Ryan Ledden here, president of Black Oak Asset Management. Thank you for tuning in this Friday morning. Again, for all you newcomers, new clients, I do this usually every Friday and trying to give out tidbits of information, hopefully valuable, hopefully that you can use. Sometimes it's not valuable information, it's just kind of updates or what's going on in our lives, or even the anecdotal funny story. If you remember from last year about mice making a home in my truck that sits outside, and I've traded that truck in since my 2004 Chevy Avalanche that I bought brand new with 200 plus thousand miles on it. I did trade it in. I got a truck, a newer truck, a GMC Sierra. So I'm like, I guess I don't need this truck anymore. So traded that in along with the Yukon. So no more funny avalanche mice stories anymore. So if you're new, you don't know what I'm talking about. But I got a huge response for that last year. Anyways, so again, I want to welcome everyone, whether you work with myself, Autumn, Parnick, Nick, or Damon. Again, we're all part of the same team here. You just may not work directly with me, but again, we converse and team up and do this stuff together and help you guys out as a team as well. So this week, obviously, we started a new year. We put together, and Autumn put this together for us, a tax reference, guide for 2024. So it's kind of highlight stuff. It doesn't get into too much detail, but it's good to have this. I reference this thing all the time. I mean, we just did it yesterday, and I've already got highlights and notes and stuff on it already. So it's a quick reference guide that I look to all the time because sometimes these numbers, which I'm really good with numbers and I'm good at memorization and stuff, and sometimes I forget these exact numbers. So I just like to have this as a reference. So this is included. It is attached. Please download it, print it off, take a look at it. Again, it's not supposed to be for I guess you could think of it as kind of a tax planning guide. You know our story. We're not allowed to give tax advice and all that, but this gives you a good indication. So some of the highlights on the far left side there, you're going to see federal income tax brackets. It depends on how you file. Obviously, they're single, married, filing jointly, head of household, married, filing separately, and then you do have the estate and trust tax because they're their own entity. So some of you may have trusts and how they're taxed, and it's very, very different. You look at the very bottom and the standard deduction for this year for 2024. I knew it was going to go up, but if you're married filing jointly, it's $29,200. So that's the standard deduction. Again, it keeps going up and going up. Now in 2026, that standard deduction is supposed to be cut in half, whatever it is at that point, and then drops supposed to be cut in half. So most of you are probably use the standard deduction. You don't itemize your deductions. Some of you do. I do. Small business owners, there's a ton of deductions out there. W-2 employees may not be as many out there for you. So it depends on how much you give and mortgage deductions, things of that nature are the most common itemized deductions. But if you're married filing jointly, 29,200 is tax free. Essentially, it's a standard deduction. For single filers, 14,600. So exactly cut in half. So yeah, it's interesting to see what it's going to go to in 2026. If they don't change anything, the standard deduction gets cut in half and tax rates do go up. That's how it's written in the law right now. Could it change? Absolutely. We'll cross that bridge when we get there. So that's why the next couple of years, you probably want to take advantage of maybe doing some Roth conversions. Let's take advantage of that because they can close that loophole. They can change the tax code. It may be more expensive from a tax standpoint to do these things later. I don't have a crystal ball, but the way they are set now, it will be more expensive unless they change the law. It will be more expensive to do things like that. Also, some highlights there. Obviously, IRA contributions, which we talked about this on before, go from 6,500 to 7,000, or if you're over the age of 50, it's within this year. If you turn 50, it goes up to $8,000. People who can contribute to a Roth IRA. If you're a single filer, the phase out, meaning you can't contribute actively to a 401k, is 146,000 to 161,000. They moved that number up, and for married filing jointly, it's 230,000 to 240,000. It's a phase out. I don't want to get into the phase out, what that means, but if you're over 240,000 of modified adjusted gross income, you can't technically add to that Roth. Now, there's maybe some ways, some backdoor, that's a case by case basis. 401k contributions go up to 23,000. If you're over the age of 50, it's 30,500 of your contributions. That does not include employer contributions. That depends on what their match is and if they want to, how much they put into to your account. But the maximum that can go in, employee and employer, is 69,000. If you are over the age of 50, then it's 76,500. That extra catch up you can put in there. HSA contributions are at the bottom of the page. You can married filing jointly, you can put up to 8,300. If you're a single filer, it's just cut in half. Their annual exclusion as far as gift tax, it's 18,000. So one person, say myself, I can give $18,000 away to as many people as possible as I want in 1 year. So if you're wanting to give away and watch people enjoy some of your wealth and not pass it on after you die, the gift tax exclusion is a great way to do that. If you want to talk more about that, please, we can have a conversation about it. The unified estate and gift tax credit amount is $13,610,000. That means your estate is not subject to the estate tax if it's less than $13,610,000. That's a lot of people. That's most people on the planet. So if you're over that, any dollar over that, it is subject to a 40% estate tax rate. So relatively high there. So definitely some estate tax planning needs to be had. So anyway, great guide. Hopefully this is of some benefit to you. Again, it's yours. Keep it, download it, save it, and use this as a reference guide in 2024. Hope that helps. Please let us know. Contact us if you have any questions of anything that I mentioned on this video this morning, and we can talk about how it pertains to you, because some of this stuff may not at all. So hopefully you have a great weekend, and we'll talk again next Friday. We'll see you.